Good afternoon and good morning or good evening, depending on where people are tuning in from. 100 years ago, South Africa, or it will be in the end of June anyway, South Africa opened the first central bank in the continent. It's been around for a long time, obviously. So it's my great pleasure to speak to the governor about those 100 years, and also to introduce the governor. I mean, the governor doesn't really require much introduction. He's been the governor since 2014, and it's just like started a second term. And for me personally, I think for most people will know that there's been a consistent presence in our policy making since the advent of democracy. Personally, I first came into contact with the governor late in the 1990s when he was the team at the Treasury. That's at the time of the early days when we were forming a new team, forming a new country, and the minister was Trevor Manuel, the DG was Maria Ramos, and there was and the team then at the time had people like Takamani Khadebe, who obviously went on to become CEO of ESCOM most recently, and another CEO of ESCOM, of course, was also in that team, Brian Molefe. I think people know who he is, and talking about ESCOM, I mean, ESCOM, like as we know, over the years, became a bit of a poster child of the sort of the governance challenges that South Africa faced, or that intensified actually in 2014, just as the governor was taking over the Reserve Bank. And I'm reminded that just looking at this, at a speech that the governor gave to SANEF, that was in the aftermath of the Nenegate issue, where he talked about the role of institutions and more specifically the role of the media in keeping like the country, in supporting the country, supporting the democracy, and resisting attempts to weaken it. And one of the institutions, of course, that withstood that assault would probably be the Reserve Bank. I mean, at the time, we all knew what was happening, or we all thought we knew what started happening with South African Revenue Services, for example, the NPA, that those were singled out as one of the institutions, some of the institutions that were really hollowed out, and people were worried about the future of the democracy as a whole. Among those that survived with their record intact or even enhanced, you probably would count the central bank, I say, among the highest there. When I wasn't in the country at the time, obviously, when I was overseas, it made big news when the governor, for example, had to take the public protector to court. We all remember that report where it was suggested that the mandate had to change. So there's been quite a big events over the years, over this long history, and then the most recent history has also been very interesting. And Ghana, since we got the last time I checked, we had about more than 500 people tuned in here. So I'm not sure how many of them are professional economists. So I would like to keep this conversation in that way, like in that spirit. So it appeals to people, whether they come from, whether they're economists or whether they're not economists, whether they're from South Africa, whether they're from outside South Africa. As I was saying to you, I know at least one person is just tuning in from Norway. So I'm going to try and keep it as open as possible. So I hope you don't mind if some of the questions look a bit simple, maybe that for professional economists. Let's look back. So the bank, as I was said, was formed, opened its doors June 31, 1921. Quite an interesting time for it wasn't long after that you had the Great Depression. And then, other big events. We've had Second World War, the rise and fall of apartheid, South Africa living in the Commonwealth, becoming a republic, and studying the rand in 1961, oil crisis in the 1970s, obviously the resurgence of the political struggle against apartheid in the 70s, 80s, that eventually led to the end of apartheid, late 1990s, mid-1990s, should I say, and then, of course, post-democracy, we had a period of great growth, and then most recently we've had the financial crisis about a decade ago, and then of course only like in the last year we've had to deal with COVID. So, Governor, that's good. Maybe I would just like maybe to get the conversation going. Just give people a sense of mindful of our audience and the diversity of our audience, or what it is that the Reserve Bank does, and how crucial it is to the country facing all these challenges that I've come across, and maybe that's a good way to start, and then we can get to the more specific questions.
Great, thank you very much, Lukanyo, for having me, and for spelling out that history the South African Reserve Bank. Although the Reserve Bank was created in 1921, it really only became a creature of the Constitution with the interim Constitution, which declared that the South African Reserve Bank shall be the central bank of the Republic of South Africa, and tasked the central bank with the responsibility of protecting the currency in the interest of balanced and sustainable growth, which then says to you that the authors of our Constitution understood that you could not have balanced and sustainable growth without price stability. And that is, in essence, what a central bank does. But we are also touching the lives of people in a very direct way. We insert ourselves in your wallet, in your pocket, in your handbags, through the notes and coins. These notes and coins used to be backed by gold when you had the gold standard. And today, the notes and coins are basically what is called fiat money. Taken on their own, they will be just a piece of paper or a piece of metal. The only reason why people will accept these notes and coins as a form of medium of exchange to settle for goods, to settle for debt, is because there is an institution that is issuing those notes and coins, that stands behind those notes and coins. And once that institution takes its eyes off the protection of those notes and coins, money becomes worthless, and you face all sorts of problems. Put simply, when inflation walks through the door, public trust jumps out through the window, and those notes and coins become but just a piece of paper or a piece of metal. The central bank also, you people go and whether you swipe your credit card or you withdraw money from an ATM or you transmit money, behind all of that is a system run by the South African Reserve Bank called the National Payment System. That is what facilitates the movement of money from one bank to the other, and for you people to settle debt and to settle for goods using either these cards or withdrawing the cash from the ATMs. There are people who also have deposits with the banks, and our duty is to make sure that the banks are able to meet their obligations when you are looking for your money. And so you would find that we regulate the banking sector to protect the interests of the depositors. And so that in sum is what we do as the central bank, tried to squeeze it into a few minutes.
Thank you, Governor. Like, I mean, as you say, like protecting the value. For me, it sounds a bit simple. Like if I have 100 rands now, like I want to be able to be sure that in 6 months' time, that 100 rand can buy pretty much what it can buy today. So, but then with the Reserve Bank recently, the politics hasn't been that far from it. People have sort of questioned, like, well, if that is a worthy goal in itself, and whether like we need to create inflation instead. But I want to just take a bit more history. I mean, like, as I said before, you were one of the people who were involved when you joined the Treasury. So soon after we became democracy, like 2 years later, I think, because you actually started the Reserve Bank, if I remember correctly. But I wanted to ask you, what was the thinking into the going to the negotiations that led to the constitution? What was the thinking of the ANC leaders of the time? I'm sort of mindful that the president of the ANC, Mr. Thabo Mbeki, for example, who was like and other leaders, like former presidents, like and the former president of the ANC, obviously before that, Oliver Tambo, they all spent the previous 30 years in exile. I'm just wondering, like, what did that play in role in terms of their thinking of what the Reserve Bank should be about its independence, about the sort of model we actually adopted that some people see as conservative? Did they experience elsewhere, watching hyperinflation in other countries? Did that inform the thinking? Like, what was going on before that, before you took over? Sorry, before you joined, before the ANC actually became a government? What was it? What were the negotiations there within?
I was involved in those early debates on economic policy of a post-apartheid South Africa. And anything that got proposed had to be underpinned by rigorous research. And that research entailed gathering international evidence and comparing what is being proposed to what the experiences of other countries were. And in that build-up, what used to happen was that we would send groups of people to various countries to see what is actually happening in those countries. And one of the things that came much earlier was the concept of an independent central bank. It was actually a fairly interesting one, because during those days, as you were going through into the negotiations, it was like, if we propose something and the other side opposes it, it must be that it might be good. That is why they are quite of like opposing it. And a number of studies were made which compared various central bank, whether it's New Zealand, we compared central banks of both advanced economies and of developing economies. And eventually it was felt that we should actually have an independent central bank. It is not a concept that was current in government. It was something that was proposed by economists outside of government who were backing up the negotiations of the liberation movement during those negotiations. And it was very much a concept of activists rather than the people who were in government. And that is how this found itself into the constitution. It was in the constitutional principles. And so when the constitution was written up, it had to be consistent with those constitutional principles. And if there are lawyers on this webinar, one of the interesting judgments, actually the very first judgment of the Constitutional Court, was the certification judgment, which had to certify that the Constitution is consistent with the constitutional principles that were agreed upon. You do not have to read the whole judgment. There is just a portion, literally, of a page that dealt with the independence of the Reserve Bank in that judgment.
Just to build onto that, the governor, and then obviously in 2000, we moved from a different system into inflation targeting. When I started my career, previously, Chris Stals was the governor. And I remember, like, there was no committee. Once you'd be sitting at your desk and an email would drop, be like, oh, interest rates have fallen. And then was scrambling around. Since, like, in terms of the outcomes, how has inflation targeting helped? Has it helped? I mean, I'm pretty sure. I mean, you see it implementing it, so you see it as a success. I mean, you wouldn't be implementing it now if you thought it was a failure. Can you explain to me for our readers how it actually works and how you think whether it's an improvement or how it is an improvement on the previous system that was there before?
Well, you said you used to receive an email to tell you that interest rates were changed. No, you used to receive a fax, Lukanyo. And it would normally be like late on a Friday that this fax would come through. South Africa had various monetary policy regimes before. And these monetary policy regimes had always been informed by either the state of the global economy or the state of the local economy. It had also been informed by the state of central bank practice across the world. So when you had the gold standard, we had a currency pegged to gold, and that was the monetary policy anchor. When the Bretton Woods system was established, you had fixed exchange rate, and that is what central banks did. All central banks then, their job was to protect the fixed exchange rate that the Bretton Woods system collapsed. And what the central bank in South Africa did in towards the 80s was to adopt quantitative measures of credit and reserve ratios. That didn't seem to work. And in the 80s, what was introduced was money aggregate. So looking at money supply, credit extension, and the lot. And at the advent of democracy, when you ask what the Reserve Bank monetary policy was, it was actually characterized by the former chief economist as an eclectic approach to monetary policy, meaning that you look at all of these things. Of course, the problem with that is that you do not know whether the central bank is worried about inflation or is worried about credit or is worried. So there wasn't a clear anchor of monetary policy. What inflation targeting did when it was introduced in 2000 was to provide an anchor for monetary policy. You, Lukanyo, you used to cover these things. One of the things that was watched was what is the net open forward position of the South African Reserve Bank? Because then it was not clear. The Reserve Bank, actually, before the Constitution, the Reserve Bank mandate was to protect the external and internal value of the rand. And the authors of the Constitution said, well, they just the value of the rand. It doesn't matter whether it's external or external. Could we just simply put it as to protect the value of the rand in the interest of balanced and sustainable growth? Inflation targeting, when South Africa introduced inflation targeting in 2000, we were like, I think, the 13th country to introduce inflation targeting. The history is there for everyone to see. Since the introduction of inflation targeting, growth in South Africa had become less volatile. Inflation has become less volatile, and not just less volatile, it has become lower. And actually, when South Africa was experiencing its highest growth rate, it was also at the time that inflation was contained. Yes, there was a commodities boom, but inflation was contained. And today, when we look back, we can say with pride that the framework had served South Africa well. There is nothing virtuous in having a high inflation rate. Higher inflation begets higher interest rates. If you want lower interest rates, you have got to have lower inflation. And the reason why we are having historically low interest rates today is precisely because we have got historically low inflation. And in short, that is the track record of inflation targeting in South Africa.
Talking about that inflation, the way it is now, like the fact that it's state contained. I mean, obviously the crisis with COVID wasn't just a supply crisis, also like a demand crisis. So in a way it explains, because there's no demand in the economy, so it explains why inflation stayed where it is. What I actually be finding quite interesting when I look at your last MPC statement and your forecast, I mean, from what I see there, inflation is going to be staying pretty much just below the midpoint for the next 2 years. And yet I see economists out there openly debating when is the Reserve Bank going to normalize policy, whether it's, the assumption being the next move in rates is going to be high. So I wonder, is there like a confusion in terms of what the central bank does? I mean, do people think you merely target rate differentials because rates might go up in the US and therefore you worry about the rand and therefore you move rates? Or do you think, is there something wrong with our messaging on that point? Because why should we even be talking about rates going high if the target is 3 to 6 and we don't expect inflation to go above 4.5%?
A couple of things that we would have to get on board. Firstly, is that let's get things clear. Normal is not going to be what we had before COVID. There is going to be a new normal. I am sure there will one day be a post-COVID economy. But for now, what we need to gear ourselves for is to live with COVID. That is what we are faced with. Now, we are a flexible inflation targeter. We set interest rates to achieve a particular inflation target. As things stand, we think that the inflation will be where we would like it, which is around the midpoint of the inflation targeting range. It is still closer to 3 than it is closer to 4.5, but there might be transition that would actually take place. Our own forecast of interest rate, based on our projection model, had said that there could be 2 interest rate hikes of 25 basis points each during the course of this year. When we met in the NPC, our assessment was that, yes, that is what the projection says, but we do not think that that is something we should do, and that this economy can still do with some support because inflation is contained. But there is also a very important thing, because in your intro, you talked about the importance of institutions. And the South African price setters understand that there is an institution that is prepared to keep inflation in check. And because there is such an institution, we have got inflation expectations anchored. In other words, what people think inflation will be in the future is in line with the central bank forecast. And that in itself is a very important positive. But in setting interest rates, you do not just look at your inflation, you look at the inflation of your major trading partners. So our inflation might be historically low, but it is still higher than that of our country peers. That would mean that we are less competitive compared to our peers. But in setting then the interest rates to deal with your inflation, what also matters is what foreign interest rates are going to do. And that plays an important part, is not so much because of inflation differential, but because it sets the base for what is called a neutral real interest rate. And so you saw that in the US, although the central bank has kept the policy rates the same, the bond market is saying to the central bank, we think inflation is going to go up, and bond yields have actually gone up. When bond yields go up in the US, they will also go up here. So now you talked about the interest rate differential. These days, the interest rate differential that matters for capital flows is not the differential of the policy rate. What matters is actually the differential of the bond yields. And South African bond yields are at the moment still significantly higher than those in the US in real terms. And that in itself is an attraction for policy investors to come in. And those portfolio investors, when they come in, they would like to know, is the central bank serious about containing inflation? Because in those bond yields, investors would like to be compensated not just for today's inflation. They don't just want to be compensated for what they think will be tomorrow's inflation. They would also want to be compensated for what they deem to be a surprise element should inflation not come out as they had expected. And all of those things fit into the decisions that you make in arriving at an appropriate policy rate to contain inflation.
It's interesting when you mentioned the different rates. I mean, the repo rate is at 3.5. Inflation is just over 3%. Yet our 10-year bond yield is about just over 9%, or it was last time I looked. So just to explain to our audience, because that looks a bit counterintuitive. Why is that the case? Is it and what policy implications can we draw from there? That doesn't mean the repo rate is too low, or what does it mean? What does it actually mean for going forward?
Put it this way, the repo rate is basically, for all intents and purposes, an overnight rate. So if you are borrowing money overnight, you will pay less than when you borrow money for a week, for a month, for a year, or for a decade. It would differ. Of course, bond traders and economists complicate this, and they call it the term structure of interest rate. Put simply is, what is the interest rate you will be expected to pay, or if you are a depositor, you expect to earn at different maturities. And that is what you face. Now, we don't know what inflation will be in 5, 10 years, or 15 or 20 years. But governments borrow money for 20 years. And so investors then incorporate into the interest rate what is called the term premium. Meaning, I'm giving you money for 20 years. I don't know what inflation is going to be in 20 years. You have got to compensate me for that. There might be surprises, but also you are the borrower. I'm not sure that you will have the means to pay me in 20 years. And for that, I am putting an additional premium. And that would then be called the country risk premium. And that is why our interest rates are higher than those in the advanced economies. Now, of course, we can bring the interest rates on the bond yields down, but if they are to come down, could we understand something? I used to be a debt manager. And as a debt manager, I know that your debt service costs are driven by price and the quantum that you borrow. And so we've got to be clear there. As a debt manager, you don't control the price. You only control the quantum. That is the amount that you must borrow. And so if we are to bring down the long-term interest rate in South Africa lower, the biggest borrower in this economy must borrow less. And if the biggest borrower borrows less, there are more resources for other borrowers to step in. And that in itself brings down the cost of capital in the overall economy. So that in essence is what you see, Lukanyo.
Governor, like I was just having a look at some of the questions from the audience, and I think with the one that has dropped actually fits in with that, with what you just discussed. Like it didn't take long before somebody asked about quantitative easing, or whether this is like a tool that's in something that's in your toolbox. Obviously, like last year at the height of COVID, I think you gave this speech at Vets, which I thought was actually great. I enjoyed reading it. I still read it sometimes. That's why I remember it. The SARB, coronavirus, and the age of magic money. There are some people who say the magic money is there. Like, why can you explain to people how this magic money, why can't we? Because the people who think there are easy solutions to our problems. ESCOM, why doesn't the governor just use the $50 billion of reserves sitting there? What's it there for? And people really get confused. Like, but this doesn't, or same with the, obviously, like with issues around PIC or whatever, like maybe they can also do the same. Like, why can't you use that $50 billion and just bail out SAA tomorrow? Why, or ESCOM or whatever? Can you explain to people why there's no magic money when they see it like that seemingly exists in terms of your reserves?
Okay, there are two aspects to your question, because you first asked about quantitative easing and then the other one was about reserves, and they are two different things. And let's start with the quantitative easing. Quantitative easing is in our toolbox. We can use quantitative easing if it is appropriate at a particular point in time to use quantitative easing. But what is this quantitative easing? I mean, quantitative easing is an instrument that central banks use when the pricing of money no longer works. And when does the pricing of money no longer works? It no longer works when interest rates are so low that it no longer influences the decisions of borrowers and of lenders. And so you also then faced with a situation where inflation is so low, close to zero, or even negative, like we saw in the case of Japan and in the case of the euro area at some point in time where inflation got negative. When you are faced with that and prices doesn't work, you use quantities. So that is where the concept of quantitative easing comes through. The way in which it is supposed to work, in theory at least, is that the central bank will buy financial assets from the private investors or from the private banks, and then the banks and the investors will find themselves with so much cash that they don't know what to do with the cash, and then they will have to go out and look for projects so that the money can be pumped into the economy, or they would spend it in something else. And when they do that, it is then expected that not only would economic activity go up, but that prices will go up. But why would central banks want prices to go up? Well, inflation is as bad as deflation, but deflation can be actually even works. Let's put it this way. If you were to buy a cup today, and you get told that this cup is 10 rands today, but do you know what? Inflation is negative. If you come tomorrow, the cup will be 9 rand. Tomorrow I come and I find the cup is 9 rand. I say, well, if I waited for a day and it became 9 rand, maybe if I wait a little bit longer, it might turn out to be 7 rand. The result will be that producers will then stop producing the cups because they could no longer make a return from that. And that is why central banks will also fight deflation. Deflation is not a problem that South Africa is facing. Japan faced the problem of deflation. Europe faced a problem of deflation. And that is why they embarked on quantitative easing. The US was not yet in deflation, but they wanted to act earlier to prevent a deflationary situation. And that is how quantitative easing would work. The circumstances under which quantitative easing could be deployed, which is a very low or negative inflation and very low or interest rate, does not hold in South Africa. Hence, you could not use that tool. Our response to COVID, we still had the tool that is used primarily by central banks, which is the policy rate. So we are able to lower the repo rate. So that is the story with quantitative easing. The reserves, well, you said, why don't we use them for ESCOM? Why not ESCOM? Why not Transnet then? Why not SAA? Oh, why not the water utilities? Or why don't we use them for social grants instead? Or why don't we use them for university education or for primary education or for this? There is a reason why countries keep reserves. Countries keep reserves because reserves are used to fund the goods that the country acquires from other countries. Imports, they are called. And countries then keep reserves for such purpose. Secondly, countries keep reserves because they have got future obligations to foreigners, and those foreigners would like to be paid in their own currencies, and hence you keep the reserves. South Africa is fortunate in another aspect that we have got a significant amount of our foreign debt denominated in our own currency. 50% of the debt that we have issued in rand is owned by foreigners. So those foreigners are paid in rand. But even as they are paid in rand, when they have to exit, they will sell the rand and buy the dollar. They better find those dollars there. And that is why a central bank maintains the reserve. So you maintain the reserves for those precautionary reasons, but also to meet your liquidity requirements should they be necessary. The reserves are not to be used for domestic expenditure, but let's suppose that we were to do it. You spend $50 billion of reserve. That means that if you are selling them, you are buying rent from this market. So you are going to have to withdraw from this market some 740 billion rands that will then come back into the central bank. And then what do you do with it? Well, we said that we are going to use it for all of those things. That means that then you would then go back and you pump it back into the system. Before you know it, there is too much rent chasing too few goods. And when there are too much rent chasing too few goods, either prices go up or the consumers will start to source imports. And when they source imports, they are going to need the foreign currency. But the foreign currency is gone. You have sold it. So you are in that conundrum. And it's very important that when we consider proposals, and this is the problem I have with the policy discourse in South Africa. People have got pet policy projects. And so to push the narrative of a particular policy position, they would frame the things around what they would like to advance and ignore all the others. In policy making, there are trade-offs. And our duty as economists is to actually frame those trade-offs for society and say, these are the trade-offs that you are faced with. And the representatives of society must thus make the choices. And those representatives of societies are the political leadership of the country. Those decisions about those trade-offs are not for the technocrats in a central bank to make, they are for the publicly elected officials. Even within the central banks as technocrats, there are trade-offs that we have to make within our remit. So, put simply, there is no such thing as a free lunch. There is a cost to everything. And society have got to be alive to the fact that there is a cost for everything. And we would not be serving society well if we would build a narrative that says to society, your problems could all be solved if those chaps in that tall black building could just sell the reserves and then we all have money and we could pay grants. I am told that there is somebody in another part of Gauteng who is busy telling people that there is money to increase the social grants, but that's the subject of another day.
I was going to ask you about that too at some point, but I thought maybe I'd wait for the audience to bring it up. And of course, that is like the former Gauteng Premier, Mr. Tokyo Sefale, talking about. I saw this thing on TV. I was actually quite surprised, as I suppose we would, even though you were not, I suppose, because it's come up before. The idea that this money came from somewhere, a heritage fund, and then money came to the Reserve Bank and was. How is it possible? I mean, I'm sure people at home are wondering, how does money disappear from the Reserve Bank? Theoretically, how could that possibly happen? Do you have like a stash of notes sitting there on which floor?
Not on each floor, but we do keep stashes of notes in various parts of our cash centers so that South Africans can have access to good quality notes and coin. Firstly, you can't make something that doesn't exist to disappear. The amounts that are being talked about here, at some stage, we're going into trillions of dollars. If we in the Reserve Bank were keeping trillions of dollars in the Reserve Bank, then our reserves will not be $50 billion. Our reserves would have been trillions of dollars, but they are not. And so we need to get some perspective here of the amounts of monies that are being talked about. And let me say that I have had so many of these fraudulent schemes coming across my desk. I understand how finance works. I understand how banking works. And if any one of you has seen those documentations, ask yourself, how come a donor with trillions of rands or billions or whatever the amount could not afford their own email domain that they are operating from a Gmail account? People don't check just basic things like those. And why these people would rather go and talk to somebody else, and if the money is in the central bank, why don't they come to the central bank and do that? Truth of the matter is that they did come. And when they came, they told us that the money is in some blue screen in the Reserve Bank. Well, we do not have a blue screen in the Reserve Bank where you can put a code and abracadabra, there is now money available in the country. And it's part of what I had said, that we should not give an impression in society that there are easy solutions. And one basic thing, when something sounds too good to be true, it's probably too good to be true. And I just hope that the people who are talking about this money didn't put their own money with those trusts, because if they did, that money is gone.
You also you alluded to something I was going to ask you, like on the previous question regarding the reserves and the magic money and all of that. You alluded to the fact that when there are people who think there are simple solutions, it's the only reason that they're not taken is because you in that big building there, and another person who used to be in that building, number 8, Mr. Mboweni, is actually you two. These solutions. You just like the only reason we're not being taken is because of the two of you. And then if anybody who goes into social media, you'll see what people sometimes say. They're like, oh, that Kganyago and Mboweni, they're in the pocket of the IMF and this and this. That's why we're not taking these solutions that are quite easy. How does that impact on you on a personal level when you read those kind of things, or do you just not read them?
No, I read them. It's part of a public discourse in a democracy. And but when people talk about the IMF, I just wanted to say that as a young policymaker coming into government in 1994, I was guided by a clause in the Reconstruction and Development Program that said, South Africa, in engaging with international financial institutions, must protect the integrity of domestic policy formulation. Let's get things clear. So when I engage with the IMF or with the World Bank or with the African Development Bank, with any international institution, I go there with an understanding. This is the policy position of South Africa, and that is what I am going to advance. And so when people say you're in the pocket of the IMF, well, I happened to chair the policy committee of the IMF for 3 years, and I want to tell you, it was a free service. They paid me nothing. I was being paid by the South African Reserve Bank, so I can't be in their pocket. But what has been the history of engagement with the IMF? I think it's important people understand this perspective. That the IMF is a club. It's a club of borrowers and lenders. And you become a member of the IMF. South Africa was a founding member of the IMF. In engaging with the IMF, we guided by protecting our own domestic policy formulation. If you do not want the prescripts of the IMF, it's very simple. You adopt your own prudent macroeconomic policies, you will never need a cent from the IMF. You wouldn't. And so we engage with the IMF as a knowledge institution. The IMF employs like the biggest repositories of very fine policy brains from very good universities around the world, but they do not have a monopoly of wisdom. And we have had situations where the IMF in this country said that you must get rid of exchange controls in one big swap, what was called a big bang. And we said, no, we are doing it gradually. That was in 1996. In 1998, we announced a further relaxation of exchange control, and the IMF said, we think you are moving too fast, go slowly. And we said, no, we have got our own pace and we move at our own pace. In 2001, the IMF said, your reserves are too low. And then we said that, yeah, we agree with you. We will continue to accumulate reserves. By 2010, the IMF said to us, we think your reserves are too high and could no longer be justified by economic needs. And we said to them, no, that is your view. Our calculation actually shows that we need more reserves, not less. We are able to engage with the IMF on an equal footing and debate with them. And South Africa must know it is well served by policymakers who are informed, who have got the technical skills and can go toe-to-toe with the IMF and debate economic policy. The IMF knows South Africa is no pushover when it comes to economic policy. And it is on that basis that we engage with them. There are many other low-income countries that do not have the benefits that South Africa has, that we have got the capability of engaging with the IMF on that basis. And that is a strength for us that we have managed to build this policy capacity.
Like just a follow, I've got a question from a colleague that we haven't seen for a while, thanks to COVID, Mfuneko Toyana from Reuters. He asks,
I thought he was from competition.
Yes, yes, it was from competition, but it's a very cordial competition. So Mfuneko asks, what measures or benchmarks have you used to determine whether monetary policy and specifically the bank's response to the COVID-19 pandemic has been successful?
Benchmarks is going to be an interesting one because different countries started from different starting points. And so what we're going to have, the benefit that we have, and this is the point, that hindsight is perfect. We have got to then have to look back and say, what has been done, was it enough or was it not enough? Well, the fact that Lukanyo, you were asking the question of economists who are saying that policy rates are going to go up, suggests that they might be thinking that we moved too far in the other direction, or we are too slow in going back to what they perceive to be normal. The stance of monetary policy is still very accommodative. When we compare interest rates to where we think they should be, what is normally called the neutral real interest rate, the neutral interest rate is higher than where interest rates are. And it is deliberate. We have done that deliberately to support the economy, but we have also been able to do it because we have got such low inflation within our target range. Looking back to last year, at the July MPC meeting, when we said that we think that the economy will contract by some 8-point-something%, everybody in the market thought we are mad. Figures were running as high as 11-12% contraction. Fast forward, when the figure for 2020 came out, even what was deemed to be an optimistic forecast by the Reserve Bank turned out to have been pessimistic. The outcome was better than what we thought. And our forecast was based on the monetary policy support that we had provided and developments elsewhere in the economy. That the economy came out better says to us that the support that we had provided did have the desired effect. So we have done well, but this was a response to a crisis. We still need to do the things we are supposed to do to get the economy of this country on a higher potential growth rate. And that brings us back to what we have always talked about: structural reforms and change that we need to lift the path of this economy.
One of the questions I was actually going to ask, could we just so we talk about the Reserve Bank as well, not just purely about rights. And one of the things obviously that's changed since is the use of a committee as opposed to, as we referred to crystals earlier. Can you give the viewers a feel of what happens in those days when you're meeting? How robust are those meetings? Like I remember the one time I think I did annoy you once, like I suggested that maybe that there was too much what I would call groupthink, and I think that's the first time you've actually ever scolded me over something. Can you give people a bit of a feel how heated are those debates? Because I know that the previous meetings before this one, they were all like 3-2, the last 3 or 4 or so, and then the last one was the last one where there was anonymity. What actually happens in those days? Like how hard do you fight there?
I will tell you that the most difficult MPC meeting for me was July 2011. And the night before we had to decide on the policy stance, I woke up in the middle of the night and I was feeling sweaty and I just couldn't sleep. And the reason was that coming from the Treasury, when you formulate fiscal policy, you take it to cabinet. Cabinet approves it and tables it in parliament. And so you can always walk away and say it was cabinet that decided on the fiscal stance. What kept me away was that suddenly I realized that when that decision comes out, it's my decision. It is not that I recommended a decision and somebody else took it. And the debates are robust, and many people think of the 5, 6, or 7 MPC members who must make that ultimate decision. What they do not know is that in the build-up to that decision, there are 2,000 good South Africans who are putting so much effort to make sure that the decision of the MPC is an informed decision. And that 2 days before that decision, there are another 200 South Africans, which includes a good number of PhDs, who are giving input into the decision that we have got to make. And so in arriving at the decision, you process all of that information, and the decisions are robust. And when you move from one meeting to the other, you will find that there are people who have taken a different position in one meeting, and you go to the next meeting, they take a completely different decision. And that, for me, is a reflection of the robustness of the process. If there is to be a mistake, there will be a mistake. But what cannot be said is that the decision that was taken was not well considered.
On that note, you said like whether it's 5, 6, or 7. We always ask you this, of course. Like it's been 5 for a while, and I think traditionally it was about 7. And I think the last time you mentioned this in public was that there was somebody you were looking at, and that fell through towards almost in the last minute. Any prospects of a change in the makeup of the MPC, and any prospects of getting new additional members anytime soon? And also, would that make any difference to the quality of the discussion and the eventual decision?
More is probably better than less. And if we were 7 rather than 5, that means there are 2 additional opinions that comes in, and that would mean that it is an informed decision. But let's also not forget that legally, actually, in terms of the Reserve Bank Act, the decision on policy rate is for the governor and the 3 deputies. So the other people that we are bringing in is to help us in making the decision. Yes, what we had fell through. We had been looking, couldn't quite get the kind of people that we're looking at. We are good in growing our own timber, and there is some good timber growing in the Reserve Bank, and that's probably where we might end up looking.
Okay, Governor, before we wrap up, I've got some couple of questions from the audience. I mean, I think this one you probably have addressed already. When we were talking about the differential between the repo rate and the government bond rates, and the question is like, do you think that gap implies that South Africa, quote unquote, is paying too much for foreign investment? But I think you probably answered that. Like, maybe, I don't know if you want to reconsider it again. Another one from pity, like it doesn't really develop. This is one of our other colleagues, like a sometimes columnist on Business Day, who like works for one of the banks. And the question is that what is the scope for greater monetary policy and fiscal policy coordination in South Africa? Interesting question, but we probably would have done with a bit more context. But I don't know if you want to give it a try anyway.
Governor number 8 liked posting things on social media. And I wanted to have a debate with him about fiscal and monetary policy settings and how we are going to go. And he'll ask me, why don't you come to the farm kind of thing, and we will talk about these things. Institutionally, we have got standing committees between the Reserve Bank and the Treasury that process things. One standing committee covers the macro policy issues, the other one covers financial sector issues, and the other one covers financial market and and banking issues, and there is one that covers international our international work. So there is a very good coordination. But in that coordination, we also understand that as a central bank, we can't tell the Treasury that this is what your fiscal policy stance should be. And they understand that they cannot tell us that this is what the monetary policy stance should be. But we are able to say as policymakers, what are the macro settings of the country? And fiscal could say, well, for this macro setting, this is what contribution of fiscal policy should be. And the central bank will say, this should be what the contribution of monetary policy is. So it is a coordination whereby every institution's responsibility and mandate and remit is actually respected.
Thank you, Governor. Like I said, we are going to wrap up quite soon, but there are some really interesting questions, not only looking at the past 100 years and like into the future 100 years. I mean, one of the questions that come up is, what do you think about cryptocurrency? And then what is there a role for them? How would they impact on monetary policy going forward? Like many of those currencies that are not issued by any state or any central bank. And then the broader question is about what will happen in the next 100 years. It's an interesting one. It's that if an asteroid blasted this planet, how long would the Reserve Bank take before it's up and running again? So I don't know whether you can actually have that kind of an answer to that kind of question. So since I was going to wrap up, maybe it's an opportunity to actually to give you a chance to actually be the one who actually wraps up in that way, because then you can talk about, not that we'll be there for the next 100 years, but we can have a vision for the next 100 years. Having seen what you've seen and taken over that bank, like as I said before, like in 2014, the second tough time when state capture was really on the up. And I did forget to actually follow up on that question. I was going to ask you, how did you feel that? Because I was sitting in the UK at that time when I saw this headline on the wire agencies about the recommendations that the central bank changes mandate, and that it changed. Like, what was I was going to ask you, what was your personal reaction to that? But I mean, and we know what happened legally and the court cases. Not interested in rehashing all of that. But when you saw that headline, what was the first thought in your head?
Okay, the reference to the cryptocurrencies, unfortunately, choice of words. We actually choose to call them crypto assets because they don't quite qualify as a currency. For them to be currency, they must meet the following three criteria. There must be a store of value, there must be a medium of exchange, and there must be a unit of account. Store of value, it looks like they are. Are they a generally accepted medium of exchange? No, it's only amongst those who are in that circle, and they are not a unit of account, but they are assets. And we released actually a policy document to inform the discussions about these crypto assets. If they are assets and they appreciate in value, surely the holders must pay capital gains tax. So that becomes important. Secondly, is that if people are utilizing these things, they need to be FICA'd, and that means that they could be a risk for money laundering. And so we watch that space very closely. And remember, you can't quite compete with a central bank. We have got the monopoly on money. And one of the big things that's going around now at the moment is the creation of central bank digital currencies. But what people need to take account of is that some 90% of the rand is actually digital. It's just that it's in wholesale. So what has been missing is to take that digital to the retail space. It's a conversation that is taking place amongst central banks. We're closing the last question about the mandate of the bank and how I personally felt. One of the things that I had learned as a policymaker is that I can never say my own personal view is as follows, because I am the chief spokesperson of the South African Reserve Bank, and it's difficult to separate my own personal views from those of the institution. Even if I say to you, this is my personal view, it will be taken as the view of the institution. Suffice to say that the institution felt that the decision was wrong, that it was reviewable. We followed the due process of the law, and the decision was reviewed and set aside, and we are happy with that outcome, and that is where I would leave it.
Thank you, Governor. I think maybe that the only thing I can say now is to thank you for your time, and to, the Reserve Bank is, for me personally, the Reserve Bank is actually quite a big part of my own education, because I moved here from the whole 15 to Johannesburg in the late 90s, so it was one of becoming a financial journalist. I didn't really know much at the time. I remember like in my first interview with Dr. Strauss, didn't even know what half the things he was saying. So it was a really big part of my education. And I think for a lot of us in journalism, financial journalism, my age anyway, I think it's quite a key institution. Like, it's not just something that we cover, it's actually something that's actually quite important to us. So we're always appreciatives of the debates, and we don't always agree with everything, but we're definitely happy to have it, and we're grateful to have it. And thank you for interacting with my audience, or Business Days audience, or our audience, and other greater the population of South Africa, to try and hope we played our role so people can actually understand better what it is that the Reserve Bank does and why it's been so important to the past 100 years of South African history, and well, and hopefully will continue to be so for the next 100 years of South African future history, or should I say. Thank you very much, Governor, and I appreciate your time.
Thank you.